Next problem, studying for our final. We are going to prepare a classified balance sheet. So classified means you have to list those subcategories: current assets, property, plant, and equipment, current liabilities, long-term liabilities, paid-in capital, retained earnings. So you do those subcategories. You're going to use this trial balance, and you will have a trial balance, so that'll make it pretty easy because trial balance is in order. The only thing you have to worry about is that an asset? Is that a current asset? What is that, right? So you have to know what these things are, and put it in the right spot on your balance sheet. All right, and on this one, we've got a retained earnings statement at the bottom. It doesn't have its heading on it. I don't know why, and this kind of ran on the next page. But so our new retained earnings is 11.2. So main thing to remember is you're not going to use this retained earnings from the trial balance. You're going to use the new, right? Use the new. And don't use any of these revenues, expenses, none of this. This goes on the income statement. None of this goes on our balance sheet. Only assets, liabilities, and stockholders' equity go on the balance sheet. And you'll have to understand what categories they go in. That's the main problem for you. All right, so here I have my balance sheet. I've already got my title on the top, so don't forget to do that. So we start with assets, of course, right? And we start with current assets. Okay, so what are our current assets? Well, current assets are anything that would be used up or convert to cash within a year. So cash, definitely. Accounts receivable, yes. Prepaid, yes. Office supplies, yes. Equipment, probably not. And we check down here and we see, okay, there's an accumulated depreciation account. So that means it's property, plant, and equipment, because only property, plant, and equipment have accumulated depreciation. All right. So we figured out these are our current assets. These are our property, plant, and equipment. And these, we'll worry about them later. All right, so I'm listing our current assets. So cash is $20,000, and accounts receivable is $12,000. Prepaid insurance is $500. Office supplies is $400. And now we need a total, right? We need our total current assets. And I'm just going to write it out here. So you add up these, and they add up to $32,900. Now we're going to do our PP&E. And we only have one, so that's nice. Equipment. I'm going to put it in this first column because equipment $524,000. And then accumulated depreciation on the equipment. You're going to subtract $239,000, and that gives us $285,000. And that's total PP&E. Now, if you had two of them, you might total them out here and then give your total. You might put your book values here and then your total out here. That's fine. Okay, so now we've got our current assets and our PP&E, so we can add them up. 32,900 plus 285,000 is 17,900, that's a 9. All right, and that right there is what we call total assets. All right, so that's the balance we're going for on the other side of our balance sheet. All right, and next up is liabilities. All right, and so anything that ends with payable and unearned revenue, but we don't have unearned revenue here. So accounts payable, salaries payable. See how I've written long term here? That's how you'll know if it's long term or not. And anything below that would be long term. So these are my current liabilities, and this is my long term liability. And that's it, because the rest is something else. Alright, so liabilities, and of course this is classified balance sheet, so we have to put down current liability, give each classification. And the first one is accounts payable, and it is accounts payable 4,700. Alright, and the next one is salaries payable, and it is 1,000. So now we can total those. They total 5,700. And of course that's total current liabilities. And now we do our long-term liabilities. And we just have one note payable. If you had more than one, you'd list them like bonds payable, mortgage payable, etc. But this we just have one. So it is 4,000. So then you'd go total long-term liabilities, 4,000. You'd list them separately if you had more than one. So now we've got current liabilities, long-term liabilities, going to be 9,700. And of course list that, total liabilities. Oh, let me let this dog out real quick. Go on. Okay. Sorry to interrupt. She is very insistent sometimes. Alright, so total liabilities 9,700. Next we're moving on to the stockholders' equity portion. Right? And of course we have the two parts, paid in capital and retained earnings. So let's start with paid in capital. And looks like we just have common stock and paid in capital in excess of par common. So we list those two. I'm going to abbreviate it, paid in capital in excess common. You could also have some preferred stock, I suppose. That wouldn't be weird. We don't in this example. 97,000. And 200,000. So total paid in capital is 297,000. Total paid in capital, 297,000. Next, retained earnings, right? After you're paid in capital, the only part left is retained earnings. And remember, not this one from up here, but the new one from your retained earnings statement. So 11,200. So you add these two, 297 plus 11,2 is $308,200. And that, of course, is total stockholder equity. And then there's the one more line. It's total liabilities and stockholder equity. So you take your 308,200 plus your 97, right? Your total liabilities, 9,700 plus 308,200 equals 317,900, and there's your balance. All right. So you'll definitely have a balance sheet to prepare. So just make sure you understand kind of where to split them up, and then it's just a matter of putting them on the balance sheet.